Guys, what if I told you I could help you see through close? You'd be interested, right? Do I have your attention? Well, this isn't that, but this is arguably better. Let's talk about it. If you're new here, welcome. If you're returning, welcome back. And if you're returning, you should know what we're talking about today. We're talking about vector candles, my favorite word in all of trading. And guys, this indicator, there's no such thing as a magic indicator. But if there were a magic indicator, this would be it, because this is a hack. So this indicator is called Trader's Reality Main. Oh my, if I knew how to spell. Okay, if you know who Trader's Reality is, he's a YouTuber that goes by the name of Tino. And everything I've learned in terms of market psychology and vector candles and all this is from him. So go check out his channel, and this is his indicator. All right, now first things first, what are vector candles? Well, if you're looking at my chart here, you can see I got some spice going on here. We got green candles, we got red candles, we got blue candles, we got pink candles, and then we got my normal, if I turn off the indicator, we got my normal white and gray candles. Now, these colored candles are our vector candles, and if you're colorblind, I'm sorry, I don't have an alternative for you. What are they? What do they mean? And how can we use them as a tool to identify where price might go to next? Guys, I'm so glad that you asked. First things first, vector candles are volume, but they are not the volume that you know, okay? They're not traditional volume. They are something called tick volume. Now, what is tick volume? Tick volume is the number of transactions that occurred within a candle. Okay, so if this blue candle, for example, the normal volume, the traditional volume was 1 million, let's just say. Tick volume is how many different transactions made up that 1 million. For example, if you had 10 transactions all at $100,000, the tick volume within this candle would be 10. Now, why is that significant? Our vector candles indicate an increase in tick volume relative to its previous 10 candles. The green and the red vectors are 200% more tick volume than the previous 10 candles on average. The blue and the pink candles are 150% more tick volume. Now, if you guys are confused, it's 100% okay. I get it. This is a cheat sheet for our vector candles, and it'll be in the description below so you guys can download it so you can always have it to reference. Now, why is this important? How is this useful? Well, if you guys haven't seen my last video about market makers, make sure you watch it. It'll be in the card at the top right now, so go click on that if you haven't seen it. But let's talk about why it's useful and what really goes on within these candles. So we already know that they are more than average tick volume, but what does that mean? How can we use that information? Now, I'm gonna try to paint you guys a picture here to demonstrate the relevance of the vector candles and what they mean. Okay, so this is the 1 minute time frame, and I wanna paint a picture for you as to what's actually happening within this candle. We already know that the green vector candles indicate higher than average tick volume, which means more transactions than normal are occurring within that candle, correct? Now, how can we use this to our benefit? What is actually going on within this candle? Now, this might be a little bit confusing, so go back and rewatch it if you need to. But this is very important. This is going to help you identify where the smart money is. In order for somebody to buy, somebody has to sell. Who buys when price is rising? Does the smart money buy during this candle? No. Retail, you and I, human psychology tells you, oh, we're pumping, let's buy, we have to buy. So if somebody has to sell in order for you to buy, who is selling into you? The market makers. We know that only they are the ones that are capable of transacting crazy amounts of tick volume within this candle. So this candle shows us right now that market makers are present in the chart. When price is pumping, retail is market longing, which means the smart money is limit selling. So what happens? Price continues to move up, and we have another green vector. Who is selling within that green vector? We got market makers selling right now, right? This is the 1 minute time frame. We got market makers selling. This whole way up, market makers are selling, and who's buying? Retail is buying. Now, as soon as you understand this concept, you can use it to your advantage to predict where price may go next. If market maker is selling on this entire move up, then that means that right now, market maker is in drawdown, correct? So if market maker is in drawdown, market maker has to come back and collect his liquidity, right? because he's not going to lose a position. There's no way. So if market maker's in drawdown, he's going to send price back so that he can realize the return on the shorts that he was placing on the whole move up. So if you told me right now, when we were up here, where do I predict price is going to go to next? My answer right off the bat would have been down, because these vectors were not recovered. Does every single vector get recovered? No, but we cannot be unaware of them. We have to know that they can get recovered, and we have to be aware that they are likely to get recovered. Now, the thing with the vector candles are, the smaller the time frame, the faster they will be recovered. So this is the 1 minute time frame. We had a little pump here, and now we just came back down into the vector candle, right? So this is market maker coming back for his liquidity. Remember, he shorted the entire way up, and now he's just realizing a return on the shorts that he had on the way up. So you can see right now in real time, market maker is doing what market maker does. And it's so important to follow the liquidity. It's so important to follow the vector candles, because this is the smart money. When people long, let's look at what happened not too long ago. When people long into this green vector candle zone, as it is here, what happens? Market maker snaps price back only to realize a return on the shorts that he placed on this entire move up. So it's very significant. Now this is liquidity. There is still liquidity here. So it is irresponsible, for example, to say, nah, price can't come here. No matter what, price is not going to come here. It's irresponsible to say that. And this is what I meant in the intro when I said, what if I could help you see through close? Well, this is not the same, but it's kind of better because you could see the money. And I'd rather see money than see through close. So now not only does a market maker need to realize the return on his shorts while price is pumping, but the market maker's liquidity is also held up at that point in the chart. Now, in addition to market maker needing to realize a return on the shorts that he's been building on this entire move up, his liquidity is also held at this point in the chart. Think about it. For somebody to sell, somebody has to buy, right? If you're buying, who's selling? The market maker is selling. Now, when you open up a position, if you have $50 in your margin, for example, that $50 is locked up. It's in your margin. Now, that's not your P&L. That's not how much you've won or how much you've lost. That's not what I'm referring to. What I'm referring to is your initial margin is locked up, and the market maker is no different. Market makers, despite what you may believe, do not have infinite pockets. They do have a limited amount of money. Now, their pockets are very deep and they're not ever going to actually lose, but they have a limited amount of money. So if retail is longing this zone here, who's selling into them, right? It's the market makers. And if there's crazy amounts of volume in here, then market maker is matching that liquidity. So not only does he need to realize a return on his original margin, but he needs to release his original margin so that he can create new positions and take price wherever price may go to next. So what I'm trying to say is that there is liquidity in this zone. Not only does the market maker need to make money, but his initial $50 margin, for example, obviously it's way more than that, is locked up in this zone. So it is in his best interest to return price to this area so that he can close out his positions and start building new positions in anticipation of taking price where it may go to next. Now, today we had an interesting move. A lot of people would have shorted this drop and then would have longed this pump and then would have gotten wrecked both ways. If we turn our indicator back on, you can see very clearly that we had some vectors in the charts that leave the clues as to what is happening. If market maker is longing as red vectors are forming, then we know that market makers need to realize a return on their longs, and they need to release their liquidity. So while everybody started shorting this candle, market maker was eating those orders and longing, only to shoot price back up after longing at the lowest possible point in the chart and wrecking everybody that shorted within this candle. The exact same thing I just said happened in reverse to the upside. As everybody started buying while the pump continued, market maker was selling. Market maker had liquidity in this zone, needed to release his liquidity, and needed to realize a return on his position. Brought price back down. So you can see that the vector candles get recovered. I want to make you aware of a market cipher strategy that I utilize all the time when it comes to market cipher B. When you see a green dot, you immediately need to look for the vectors on that time frame and have an idea as to where price can go. As you can see, this pink vector has not been tapped, which means it will be foolish for us to assume that price cannot go to this zone. Now, I like to utilize this on the higher term time frames because it really gives me a good sense on where price can go to. If you come to the 1 hour time frame on ETH, you can see very clearly we have a bearish divergence, right? And we have a red dot. Look to the left. Where are the vector candles? This is liquidity that has not been taken. So it is foolish to assume that price cannot go to this point in the chart. You can't just say, oh, no, you can't rule it out. It is irresponsible to do that. So this is how I use market cipher B alongside vector candles alone, without even doing my technical analysis yet, to have a pretty good idea as to where price can go. The higher the time frame, the more precedent it will take, the more important it'll be, the more weight it will have. Let's look at the 4 hour. We got vectors. This has to be taken. These can come and get taken. So this is a very powerful strategy that you guys can use when it comes to finding and trading alongside the smart money and not being like retail that longs into green vector candles and then eventually gets wrecked. Now guys, if you like the content, please make sure to like and subscribe, hit the notification bell, and if you haven't already done so, join the Discord. I have a free VIP section where I give you guys my updates. I do think we're potentially topped out, this divergence on the 4 hour, whatever. I give you guys my exact levels that I'm looking at trading. I give you guys the market cipher B setups. I let you guys know exactly what I'm thinking and where price may go to next. And you can join the VIP section for absolutely free by just DMing my bot the 4-digit code that you hear in my most recent video every time I upload. In this video, we'll make the number 1113. And guys, if you're looking for an exchange to trade on, my exchange of choice is MEXC. It is the absolute cheapest when it comes to fees, 0.00%. Maker fee, 0.01% taker fee. What does that mean? That essentially means that you're trading for free. Like, it's basically free. So your fees are super minimal on that. That's the exchange that I use. The link is down below. And yeah, that's it for today's video, guys. I'll catch you in the Discord. But for now, happy trading. Bye.